Hey guys, and welcome to another edition of Swinging Sunday Scan. We're coming out midweek for Sunday, March the 13th. If any of this content helped you guys out in any way, please do me a huge favor and hit that like button, hit that subscribe button, and click the bell if you want to get notifications anytime I put out new content. Let's jump right into the market. Last week, I was thinking we were about to see some interesting action in the markets. But over the last few days, things have been really choppy and just kind of hanging around. In previous weeks, what I was hoping to see was a big push up towards this 450 area where we could set up a bunch of shorts, ride this market to the downside. However, we only saw a short bounce. We did see momentum to the downside, but this 410 area has been a real struggle for the market to get below. Finally, today, March the 16th on Wednesday, I'm recording this at 8:45 p.m. Market close, we did see a pretty big green day bouncing above this consolidation area over the 427 area. And at this point, I'm basically going to start preparing for more shorts. A lot of key things to consider. One, we have not broken below this 410 area. So I would consider that on the side of strength to the upside. We've seen this market do some pretty crazy things moving to the upside. And let's not kid ourselves, although my overall bias is short, I am fully aware at any point this market could put in another green run all the way back to all-time highs at any point. So best thing to do is just play the levels and follow the plan. My plan this week on Sunday was basically to look for relatively strong stocks where I could play for a bounce long. We never got an extended move to the downside, and like I mentioned last week, it's been really tough to find a lot of good quality long setups. So due to the lack of extension and lack of quality, there was not really any great long ideas that I was really crazy about that I scanned through on Sunday. But also, going into the week, it was really just too late to start shorting stocks once we've broken below that 427 area. So basically, for the majority of the beginning of this week, I was just sitting on my hands, scanning my brains out, not finding anything worth taking. Finally, the market did something today. It broke above this chop zone area, and there's a few opportunities that I will be looking at going into the rest of this week and into the following week. I wanted to pull up the NQ here really quick, the NASDAQ futures, just to point out a slight sign of weakness, which could be an indication of a continuation to the downside. We did peekaboo slightly below this tail this week, which could be a slight sign of weakness. Now, when we're dealing with stocks and especially the market, small breaks of areas like this aren't really super significant. You really should consider these areas because they're never really to the penny or to the tick. So although this isn't a major sign, I would still consider this a small indication. Let's get into some previous ideas. Last week, thankfully, was a week of profit taking. WELL, we were coming up on earnings. I closed this one out for a small profit. CPNG, we had a continuation all the way to full target. We did have a bit of a crazy ride here where we gapped up with the green day and then reversed back to the downside, continuing in our favor with another big gap. That wasn't something I was really excited to see. I've talked a lot about gaps on a lot of these Sunday scans, and I'm not a fan of them. But all in all, the trade ended well, and we closed this one out for a profit. ATEN was another one that we closed out last week. Last week, while I was reviewing this trade, I noticed a lot of really strange price action, like this giant gap here to the upside on earnings with these massive red and green bars. I decided during that review that I was going to close out this trade if we got a couple bars to the downside, which happened, and I believe I closed it either on March the 7th or March the 8th for about a 1 hour profit. This one did end up going to full target, but I'm okay with that decision being that it was for risk management reasons. I am currently still in MODV. We were looking pretty good on this one on the first day that we entered the trade. However, with the choppy market so far, we've basically just went sideways. We did get a pretty big green bar here with the market. Not too concerned about that. If anything, if we get a reversal back to the downside and we can break below the lows of the most recent pivot, this will just give me an opportunity to lower my risk down to that pivot high. The trade is looking okay. We'll see how it plays out. AMSWA was another one that I was in, that I'm still currently in. Again, this one's looking okay. We have been grinding kind of slowly to the downside. We did see a bit of a pop with the market. However, it didn't pop as high as the market did, and it didn't pop as high as the previous stock MODV did. So we are seeing signs of relative weakness. So of the two, this one is looking pretty good. Those are the only two trades I'm currently in. A previous idea from last week, INSE. This one had earnings in the way, but if it didn't, this would have been a really great trade to get in 2 days before earnings. My plan would have let me get in, the day before earnings here, if earnings wasn't where it was. It would have been off to a great start, but the plan is the plan, and I'll continue to follow that. Another idea from last week, NWL. This one is super choppy. The retrace was way too deep for me. This one failed to bounce in 2 separate areas. This one still looks like it could have some potential to the upside, but it's just too sloppy and choppy for me. I'm not going to bother entertaining this one. RCH was another idea. This one, we saw a bit of a double bottom retest in this support area here. But again, like the last one, it's just so choppy. Not even worth the risk of getting chopped out on this one. Although not necessarily a terrible idea if you have potentially like a 2-to-1 risk to reward in your plan and you don't mind a super wide risk, to give this one some room to chop around. But it's just not for me. Last idea from last week, CARG. This one had a really clean pullback. It did break through that support area, but still looked pretty good. Unfortunately, the wideness of these bars kept me away. But with the relative strength with the market and the range that this stock is putting in, if your plan allows you to somehow get in on one of these bars, let's say on this day here on March 8th, if you were to get in on the break of the high of this bar on the following day, you could still be riding this one, which looks like probably around a 2-hour move already, with plenty of room up to this pivot at $50. For me, that's a really aggressive trade, but for someone who could take that trade and meet their plan, this looks like a decent one. So the plan going into this week basically was to be looking for stocks with relative strength to play with potential bounce with an extension of the market towards the downside. And basically try to play a bounce on the market. The first idea that I found was TALO. This one looks a lot like a lot of the other ideas that I already mentioned from last week. It's similar in the sense that we put in a big move up and retrace around a pivot, which looks like a great area to enter. TALO looks like a decent one to me. It is an energy stock. The energy stocks has been going pretty crazy. I do have another 2 energy stocks that kind of fit a similar plan. So one thing I will mention is it's not always a great idea to have stocks in the same sector active in your portfolio. The reason being, sectors move together just like how stocks move alongside with the market. Sectors also move very closely together. So it's not a big surprise that a lot of these energy stocks are going to have similar patterns, but it'd be very wise for anyone, if you want a diversified portfolio, whether it be investing or swing trading, never have too many stocks of the same sector in the stock. You're basically overexposing yourself to a larger risk, where if all of them move against you, you're likely to get stopped out on all of them altogether, and there's no real diversification in that. So the other 2 energy stocks that I'm looking at are ENB. This one's not quite ready yet. This is one that we had a winner previously in a week or two ago. I like to keep winners on a close watch, as I found that winners tend to pay out in future trades with a higher probability of success. So for this one, I'd be looking at for a further pullback, possibly down towards this $55 area or even 54, with a pierce of this blue 21 period moving average. BEPC is another idea that has not set up yet. We saw a big, strong move towards the upside, and I'm basically looking for a retrace, either this $50, $49, or $48 area. We even have some support around the $47 area. That would be a pretty steep retrace, but this one will be on watch to see what happens in the next week or two. Another long idea that I found, ANDE. To be honest, I'm not a super big fan of this one. We did get a big move and a retrace here with a nice little tight consolidation. This one looks a lot like EMB that we had a recent winner on. For some reason, I have trust issues with this one. It might be because when we did put in a big move here, we did gap up, and then what happened was 2 huge red days. I don't generally like to take longs after red days like this. However, ENB, a little bit similar. We had not 2 big red days, but we had a gap down and a big red day with the consolidation. It did end up working, but for some reason, I just have trust issues with this one. I'll probably leave this one alone, but I will watch to see if we get a good entry on this one. This will also be dependent on what the market does in the next couple days. Another long idea, GRIN. The idea was try to time a bounce in the market with these stocks. This one has a really choppy, ugly chart. However, it is retracing to a really good area with a double top retest. We're retracing right into this red 50 period moving average. But right now, it looks like this one's probably bouncing without me. I don't have an entry that follows my plan here. Also, this choppy top for me shows a lot of sign of resistance. So overall, this one is not really a great trade for my plan, but it's an idea that I found. Last and probably the worst, CW. Again, big move, retrace down to a decent area of support, which was resistance here. But again, really choppy, overlappy, huge tails. You know, if you like trading choppy stocks, I mean, maybe this one will fit your plan, but doesn't fit mine. But it is an idea worthy of looking at with potential room to the upside. Something else to look at here, let's look at the monthly chart. We have recently broke into all-time highs, and we're now retesting that's resistance area, which now is support. So another decent area where this is retracing to, but again, not my cup of tea at the moment. A lot of these stocks would be heavily dependent on either them trading independently of the market and just trading on their own page, and or a good bounce with the market. So one that I said I was gonna continue to watch was McDonald's MCD. We have recently been bouncing along with the bounce in the market. The area that I'd be looking at for this kind of to stall out, to put in some narrow range, maybe doji style bars, would be close to this green box and this red box. If we start stalling out prior to that, I'd still be interested in looking at a possible entry. Now, it doesn't mean I'm going to definitely take this trade. However, I'll be watching it to see what it does. If I get a good entry spot, I may or may not enter this trade on MCD short. And finally, RBA. I have entered this trade into my platform. However, with this green bar here that we put in on a Friday with a bottoming tail, there's a chance that I'll either cancel this regardless of what happens tomorrow, or if we do break above my planned stop loss, I will cancel this trade. However, the reason why I did like this trade was because while the market was putting in a big bounce, this one wasn't breaking above this consolidation area, which to me was a sign of weakness. This stock has been downtrending for a while now and put in a big bounce, and this is kind of my bread and butter short setup, where we're bouncing right into this underside of this kind of support area here, which is now going to become a resistance area, but the timing is a little bit off because I normally like to short these when the market is extended to the upside. So ideally, maybe in the next day or so, we get a big extension on the market. This one can hang about for a little bit and give me maybe the same entry or a better one, and then maybe we can get in this one short. I like the reward to risk on this one. We have room to earnings. It looks pretty good overall. It's just the timing with the market is not great. Well, thanks again, guys. If you made it to the end of this video, I really appreciate you watching. If any of this content helped you out in any way, please, guys, hit that like button. If you want to see more content like this in the future, hit subscribe, hit the bell. If you want to get notifications anytime I put out new content. Well, the market hasn't heated up like I was hoping it would, but the market put in a big green day today. Maybe we'll see some extension to the upside, and maybe we'll see some opportunity for some more trades. Thanks, guys. Be well, trade safe, and we'll catch you on the next one.